Hey, David Krasinski here from DK Home Loans. Today I want to talk about what a buy down is and show you some examples of how this could help you if you're purchasing a home or if you're a real estate agent that is helping borrowers in this type of environment where interest rates are above 6%. I'm going to do a screen share with you here, kind of go through some housekeeping on what a buy down is. A buy down basically is a temporary buy down that can help you have a lower monthly payment for the first few years, depending on what the term of the buy down is, of the loan. The program highlights are this works for FHA, VA, conventional, any amortization. The most common is a 30-year fixed, any property type minus manufactured home. It does not work for investors, only owner-occupied and second homes. And the program obviously has minimum FICO requirements like most loan programs do. Must also be qualified at the note rate. This program is not meant to help get people into homes that can't qualify. This program is just meant to help ease the pain of these higher interest rates that we're having right now. On the buy down, the most common one that people have heard of is a 2-1 buy down. On a 3-2-1 buy down, that's where the note rate is 3% lower the first year, 2% lower the second year, and 1% lower the third year. If your note rate is 6.375, you would start at 3.375. The 2-1 buy down is arguably the most popular. That's one a lot of people use because the cost is a lot lower than a 3-2-1. A 1-1, that's where interest rate lower by 1% the first year and 1% lower the second year. And the 1-0, that's where the interest rate is lower the first year by 1%. On a 3-2-1 buy down, this is the power of this. This is on a $400,000 loan amount. If you look at just the note rate of 6.375, the first year on a 3-2-1 buy down is actually $727 a month lower than your fully indexed rate. It's a savings of $8,725 the first year. The second year it's lower by almost $500. Third year, $250. The cost of this is around $17,772.48. And so once again, this is a $400,000 loan amount, but you can see how much you're saving in the first year. If we look at a 2-1 buy down, it's basically the same numbers as the 3-2-1 minus the first year. So you're looking at a savings of almost $500 per month. Second year savings of $255 for a cost of $9,000. That's why this is utilized more, because if the seller is going to pay some of your closing costs and pay a portion of the buy down, if they're going to pay $15,000 in closing cost, they could pay $9,000 towards the buy down, then they could pay $6,000 towards your closing costs, where in this case, a 3-2-1, for them to pay $15,000 to go up to $17,000 is quite a big difference. The 1-1, let's take a look at that one. That's a 6.375 fully indexed rate, and then year 1, 5.375, year 2, 5.375. So if you're worried about rates going up, this is the one that's not very expensive, $6,134. And then the 1-0, this one saves you $255, only a cost of $3,000. This is a very underutilized program right now, but with rates being so high, it's great. It's great information for you if you're out there shopping for a home, if you're looking to purchase. This will help you. This will help you maintain a lower mortgage payment. And I've got another video. I'm going to throw a link down that you can go to. It's much longer than this. It's going to go into a lot more details. But thank you so much for watching, and have a great day.